I'm Jeannie Kelly, your credit coach, and I missed you. So I'm excited to talk today on the podcast. And I love talking about in the moment. And I say this often that a lot of times, uh, it's things that I'm being asked that I love to bring to the podcast to you. And a lot of it made sense. Like yesterday, I was on the call with someone because I was reviewing her credit report, and there was one account that she had a late payment, and it was only like 2 months ago that she had the late payment. So I said, "What happened there?" She goes, "Oh, it's paid off. The account's paid off." And I said, "No, I understand. I can see that it has a zero balance, but there's a late payment." And she thought that once the account was paid back to zero, that the late payment would disappear. And I can't blame her for thinking that way, because if if no one taught her about credit and how your accounts get reported and late payments, it's not all about maybe that late fee, right? Of paying $35 or whatever it may be. It's about the late going on the credit report because it was over 30 days late and affecting her credit score. And she just honestly did not know. She really thought that by paying the account to zero, and yes, that there was a little mix up, and she realized that she was like 38 days late, that did go on her credit report. And when a new late hits your credit report, it can drop your score quite a bit. And I always say time heals all wounds. And even on the credit, if that late was 2 years ago, it wouldn't be hurting her as much as it is in the moment. And of course, what's happening? She wants to, go look for a mortgage. And she's a single mom, 4 kids, and this is something that it's a major hurdle. And again, it's just and I'm bringing this up because I realized we need to be talking about this more. I need to make sure that that paying a bill late can not just hurt that extra fee, that it can go on your credit report. And sometimes I think I've been in this for so long, right? I love the credit industry. I live and breathe it. And you all know my story that I had bad credit, and that's what got me into this industry, that I had to dig myself out of that situation. But sometimes I forget about the things that I think are that we would know, but it's not true at all. There's so much that I didn't know and I had to learn. And so that was interesting. That happened yesterday. And then another thing happened yesterday, and that's one of my mortgage lenders called me and said, "Listen, underwriting does not want disputes on a credit report. They have to be taken off because, underwriting doesn't want it, blah, blah, blah." And I said, "Yeah, of course." And she did not know what to tell the client. She's like, "I don't know how to help this client, but this client needs this mortgage. There's nothing I can do until those comments are out." So do they just like, you know, do they just call the creditor and that's it? I'm like, okay, this is a project. So let me give this advice to you. If you're listening and you're in the process of going to go for a mortgage, first look at your credit report. You can do this for free at annualcreditreport.com. So look over your Experian, TransUnion, and Equifax. And when you look at the accounts, because a lot of times our eyes are trying to look at, are the balances right? Is there negative information on that credit report? Is there an account that doesn't belong to me? The things that we know we want to be definitely looking at. But is there also an account that says, this account is in dispute? Maybe you disputed it at one time. Maybe you had an active dispute 2 weeks ago. I don't know. But if you are going for a mortgage, get out that highlighter, look at the credit reports, and see if any accounts have you in dispute. And if so, the credit report that's reporting it, you want to contact them and you want to tell them that you are no longer disputing this account and that you want it taken out of dispute. But you also have to call the creditor that's reporting the information. So if that's, one of the credit card companies you choose to do business with, an installment loan, whatever it may be, could even be a collection company, you have to tell them you're no longer disputing it. So they also, in their system, take it out. Because I have seen many times someone doing one or the other, and it just and the comment's still there, that it's still in dispute. So it is a little time consuming. You got to be organized. The good thing is at annualcreditreports.com, you're able to go on once a week to look at your reports. So begin this process, and if you know you have one account, two accounts in dispute, and you want that out before your mortgage broker pulls your credit report, you're able to be checking on that directly with looking at it online, or of course, you can always call them up. But if you want to definitely make sure that it's off, you look at it that way and you can see your reports. So I wanted to talk about that because it is time consuming, and everything's not instant, because then of course this lender's like, well, can it be done by tomorrow? Well, everything's not that fast. So it takes what it takes. It depends on the policy of how long the credit reporting agency is going. Are they going to do that right now? Does the system take 24, 48 hours to have that lifted? How long is it going to take the creditor to take it out? So this is time consuming. It's something you definitely want to do in advance. Don't think that you want to go for a mortgage in a week or in 2 weeks and you have active disputes going on, and that you're able to just unclick something and it's going to take that out really quick. It is something that does take time. So make sure you schedule and that you understand that. So, those are two great things. How disputes work on your credit report. Regarding the late payment, there was something else I wanted to talk about. Oh, yeah. And here's the third thing that I was asked, and actually it was yesterday. So I'm jumping on here, having a cup of coffee with you, and wanting to talk about what happened yesterday. But I thought these are three great things. And the last one is a realtor called me and said her client has been checking her credit score. And she knew it wasn't a FICO score, but she was checking her credit score and really working hard on making sure she was paying down balances and whatever else she was doing. So she said that her score was a 740 for what she was looking at. And then when she went to this realtor's, mortgage partner, it was a 640 something. And she said, come on, Jeannie, isn't that a little dramatic? Obviously, something's wrong. I'm like, something's wrong with what? If it's not the FICO score for the mortgages, which right now that's FICO 2, 4, and 5, with Experian being scored, TransUnion and Equifax. So at the moment, 90% of lenders are using the FICO scores 2, 4, and 5 for mortgage approvals. And if so, yes, it could be totally different than, I don't know what score she was looking at. There's so many credit scores out there. Who knows? And I always say, I'm a credit expert. All of a sudden, I could come up with a scoring model, right, for my students. But would it matter if no one's paying for that score for, purchasing something? It could just be educational based. I also said, who knows where that score range is? Could it be a range from 400 to 900? And that's why, it's a little different, or 500 to 900. I mean, I have no idea what score she was looking at. I have no idea what's put into that score. I don't know anything except that I know you want to be angry about it because she was really angry about it, but the score is the score. If she saw that score going up, I just said, imagine what her FICO was. It must have been lower. And she worked on things to make that go up. And at least it is in the 640 range. It could have been much less. So if you are wanting to purchase a home soon, if you're looking at a score, really pay attention to what score it is. And know that you could go into a mortgage office and they're going to pull 90% of lenders use FICO scoring models. So if so, it could be different. And if you want to, you can go on myfico.com and purchase your mortgage score and credit report. So, it costs you money. It doesn't hurt your credit as an inquiry. so it doesn't hurt your credit that way. It just, you'll have to pay for it. Or again, just know going into the mortgage office that you really don't know what your correct mortgage score is. You could say, I'm looking at this score and it says I'm pretty good, or it says I'm excellent. And then just don't be surprised when that score is different. And there's no way I know. And she even said, I've seen other scores. I've seen a difference, between 20 points or something like that, but never this much. But I said, go back and ask your client what score she's been tracking. This way, then that information. And also look at what the range was. So I just wanted to, you know, catch up with you. It's been a while. I love having guests on, but I also love talking directly to you and always keeping you in the moment of what I'm asked about, because maybe one of these three things, is something that you learned today. And if not, and you want to know something, please, I love the messages, whether you go on my Instagram, Credit Genie, or you message into the office. That's what brings me, to this podcast and to keep talking about financial wellness. I think financial wellness is so important to talk about, and credit is a big part of it. And I love talking to you about healthy credit all the time. We can start building from that foundation. Credit can save you money if you know how to use your credit right. And I'm here to help you achieve your credit goals. So thank you for joining me this week on Credit Over Coffee.